I think probably, now the idea is you will invest in an airline, I guess.
Warren Buffett says never to invest in an airline. So
You've invested now in Zepto, Rapido, Ultrahuman, Bolt, Rocket Lane. You've done previous Zomato was there. You've exited OLX, Pratilipi, Delivery. What should be in a pitch deck? Because there's a lot of myth against that. Should we give the numbers real? Should be the projections real? Then you don't get to pitch today.
your question is I cannot have an answer to this question. Like, if I had the answer to this question, then I would be building this company.
Yeah.
This is the 11 years now, and I've been here. So
okay, just to I think you can see the audience too. We have about 100 people already, and people are coming in. So just to give the audience once more, two announcements. First of all, welcome all to the Better Call show by Idea Patre. And as the name suggests, we call the best of people to speak about the things that we want to understand in entrepreneurship. And today we have Pratik Poddar from Nexus Ventures, who we don't need any introduction, but for the formalities of it, we can probably say a few words. But this was an event that was initially scheduled a month before, but for various reasons we had to push. And today was definitely supposed to happen, but unfortunately Indigo is going through a big crisis, and Pratik was stuck in the airport for 30 hours to make sure he would want to attend this and see you all. But I think he finally reached Bangalore today morning. Am I right, Pratik?
yeah, just a few hours back.
Yeah, so we are really sorry for this inconvenience. So we'll try to make the best out of it and do an hour session, and you guys can ask questions. And a lot of people wanted to particularly come to interact with you, Pratik. So you got to promise me that you'll come to Chennai another time to just make do of what we missed here.
Aravind, I'm not kidding. When you were telling me to book the flights, I was trying to book. You were telling me to book the flight exactly for this time. I was trying to book flight earlier or later so that I can actually spend time in Chennai. I don't get to come to Chennai as much because I don't do SaaS as much. So yes. I don't get to come to Chennai as much. And I was very excited and really sorry it could not happen. And yesterday, I felt like a victim from Akshay Kumar movie. That some attack is happening and Akshay Kumar is coming to save us. So it was terrible yesterday. So sorry I could not be there in person.
No worries. I think we all understand. I think some of us have also spent this trouble in the airport. I got stuck in Delhi for 6 hours day before yesterday, so I understand the pain, but we'll make the best out of it. I want to start with a little bit of your history, and it was quite fascinating when I did some research. You studied in IIT Bombay, then you worked in Morgan Stanley, then you worked in Blackstone for about 2 years. Then you became an entrepreneur, and you were a startup founder. And then you moved to being a VC. You worked your way up, and you're a partner for the last 2 years in Nexus. Now, according to me, that's great career compounding. Like, I've not seen that, quite a bit. So just tell me, was that first a very planned execution, or did that just happen as the waves go by? And what was the key learning in each of these phases? One thing that you could tell that led you to be here. That would be great for the people sitting in the dais.
I think the big career switch that I did is not reflected in this introduction because it happened before this. And all of this was actually very connected. So while I was growing up, I wanted to be a researcher. I wanted to do a PhD in math. And all my preparation in IIT was really like I published papers, I did research internships, and the intent was to do PhD. And over time, I got more interested in entrepreneurship. So even in my 4th year in college, I used to work for these entrepreneurs. I used to code for these entrepreneurs, and if I did good job, they would give me Subway sandwich. If I did bad job, they will give me Cafe Coffee Day Express coffee. That was my I was an entrepreneur really even when I was graduating. When I joined Morgan, I thought it is like math, but not really, like PhD, but not more action oriented. So for me, that was a part of joining a firm from where I could build something in future. And interestingly, I liked Morgan because everyone there was entrepreneurial. And now looking back, all my teammates have started companies and that feel was there even when I was joining Morgan. I joined Blackstone because I said I want to learn how business building works. And then I started up, and my startups did not fail, did not work out. All the startups failed, and at that point of time, Nexus seemed like the natural path that I'll become a VC and learn how startup building works. Now, the only disconnect here is that after Nexus, I was supposed to quit Nexus in 2 years and start up. It has been more than 11 years, about 11 years now, and I have been here. So that is the only incoherence in the story. While everything else I did was really because I just wanted to build cool stuff, and everything was just, well, this is not working out, but this might be better for me to build stuff. This is not working out. This might be better to build stuff. And everything was really very connected and not as incoherent as it seems from outside.
That's great. That's great. So a lot of your journey was in attempting to always build something. You know, I think that was the core mindset. And you grabbed on opportunities where you failed, so let me go learn. You tried again, let me fail, let me go learn. So that constant search for learning probably is maybe the core philosophy behind all these career shifts, right? I would say.
Yeah. In fact, there's a video by this professor called Deepak Malhotra, who teaches at HBS, which is quit early, quit often. And I used to watch that video a lot of times. That when you are young, perhaps it's okay to quit early and quit often, because you're just searching for where you land right, and it's okay. Like, just no point being in the job just for the sake of completing 2 years, 3 years, 4 years. And that video actually, when I met Deepak once, I told him this, that he perhaps does not realize it, but his video actually affected me in many ways.
Got it. So just to spend some time before we get into the entrepreneurial stint. So you started with quant trading in Morgan Stanley, right? Like, I think that was the time. So I think that was the place where you got to learn a lot about financial discipline and the numbers and how much of capital efficiency is required for a founder to raise money at the right time. So can you tell me, one, the cultural difference between Blackstone and Morgan, and could you feel your growth in getting adapt to the numbers with respect to working in these consultancies and in VC firms?
Yeah. So I think first of all, my role at Morgan Stanley was less about finance, because I was not on the investment banking side. I was really a trader. So I was really looking, and that also an algorithmic trader. So we were really looking for beautiful, elegant math solutions to make money. Like, hey, this arbitrage exists. Like, let's make money here. This is very different from investing, where it is very touch and where it is less math. It is a lot more about person, identifying the market, identifying the person, and so on. I think that the two things that stays with me from Morgan Stanley days. One is I still think that I speak and think more mathematically than most other people around me do. So when you tell me retention is this, graph is going up, like I can actually feel that more, and I visualize that. I try to visualize that more than perhaps others do. And second, I think the tech network, the math network that we built then, like I said, everyone from there those days is an entrepreneur. It's actually amazing. I got hired into Morgan because my super boss at I got hired into Nexus because my super boss at Morgan Stanley later started a company which was funded by Nexus, and he recommended me at Nexus. So I think that network was very interesting and very unique, and a lot of them have started investment banks. A lot of people are founders of large funded companies. So it has been a good network to start out of, and that was of course, I say this often, that the first job actually defines how you think forever. And I had a good first job and a good first boss and team in some ways.
Great. Okay. So I think now I want to move into your entrepreneurial stint, the first time. So you started, I think, 3 companies, right? You did Clipper, you did Content R Square, I think, which is still running, if I'm right, and Scatter. These are 3 companies, 3 fairly little different from one another, but more or less in the same space of SIM, which is in consumers. So one, what was the thought behind them? And What were the learnings, between each of these companies? Like, did it become easier or harder? Because that's what I kind of tell, like at Idea Patre, at MudhalVC, we keep saying, hey, it's a journey. You got to do it 2 to 3 times before you get it right. So what was your thoughts in, failing and starting again and doing it multiple times?
First of all, looking back, uh, I did all the mistakes possible. So whatever I'll say will not sound smart at all, but it's okay. Like it's a real answer. Uh,
Mm-hmm.
the first idea I started with, uh, Clipper, it was supposed to be a social commerce network, something like Pinterest for commerce, Pinterest with commerce embedded. And I started with my best buddy from college, and we were very similar in many ways. Both of us were techies, and we thought we'll build it together. I think many mistakes. First of all, both of us were not really product guys. We were both tech guys, and we didn't really understand what the customer needed. We were not really shoppers ourselves, so we didn't really have any appreciation of the customer. We were building stuff because it was cool and because it has worked in US. So big problem, big mistake, big stupidity. Second, we did not persevere enough. Ideally, we should have built for longer and then reached to a conclusion, but we got tired in a year and then shut down. The third, I think we were just too early to build a aggregator on top of e-commerce in India. Either we should have
Mm-hmm.
built for the global markets or built a full stack company. India was too young in e-commerce to build an aggregator. Looking back,
This is what era, what time, just for the audience? 2012.
so in
Okay.
2012, like we had Snapdeal, Flipkart, Craftsvilla. There were these cool companies called Urban. Abhishek Goyal's company. This was exciting product, which had good fashion products and Fashion and You, and like there were a lot of these companies where which we aggregated and we said we'll recommend good products to the
I think Mintra just started at that time, right? If I'm right, like, what did Mintra just started at that time, right? Like,
Myntra was also there. Myntra was, well, a couple of years old, so Myntra was still large enough for us.
yeah,
But
okay,
yeah, exactly. Uh, so so that line road was there. So that of course did not work out for us.
mm-hmm.
Um, and again, the second mistake I did from there on is that I was not looking for a problem. I was not looking for a customer's pain point. I was looking for what I can build from here on. And and what I had built was I was understanding. I had built a good model to understand products and understands users' interests. So I said, I understand users' interests. I'll recommend what articles these guys should be reading, and I'll build a social content recommendation engine. And of course, I built this, but limited monetization was happening. But and same mistake again, where I was trying to figure out, hey, I built this, and there are some users who are liking it, but users are saying, well, once you have told me what you should be reading, maybe you could summarize it as well. So I built a new summarization engine, and this was before InShots. InShots did it smartly, and that's why customer first thinking is very important. When I met InShots founders first, they told me, "Hey, Pratik, you tried this, you failed. Now, what was the reason?" And I explained that these are the reasons I failed. And his response was, "Why were you doing it technically? Why were you not just having a team to, because the number of content pieces that people really want to read is just 20, 30. Why don't you just why didn't you just do it manually?" I'm like, shit, I was stupid. Uh, and but try to build that. Then that also did not work out. Then pivoted this, that hey, I understand content, and brands need help in figuring out what content will engage with their users better. And so built a brand first content marketing company called Scatter. That company is still active. And my founders are running it. I
Great.
think it's a good business, and we are selling it in India. So as a VC, the question I ask is, when you are selling this product in India, the market size becomes limited. but it's a great business for sure. And after 3 years of constant iteration, constant fighting, constant pivoting, and 3 years looks like a small time now, but as a 25-year-old kid, 3 years does not seem like a small time. And I said, I need to learn, I need to start from scratch. And then I joined. Nexus gave me an opportunity and joined Nexus about 11 years.
That's great. I think I'd like to just spend a minute on something very important that you said, which is, I was building products that I knew how to build and I wasn't listening to what customers wanted. And, that is probably the most profound, most basic thing that all entrepreneurs miss. And this is something that we constantly also kind of coach and mentor our companies at IdeaPatray, that, hey, the first thing is to actually go talk to users. And Steve Jobs says this very well. You got to start from the customer experience and work backwards to the technology. You can't say, hey, we have awesome technology and now let's go try to sell it to users. That 90% never works. Unless it's so deep tech level where you build teleportation devices, yeah, then people are going to use it. But generally, you always start with the customer. What is the problem that you're trying to solve? What problems do they have? Pick a customer segment, go talk to them, and then work backwards. And I think that's the greatest learning that even you as a founder has had. Yeah.
In fact, some founders, like last week, a founder came and pitched to me, Pratik, I have built the best voice AI solution for India market. And my product works very well. And this is the best solution you can ever find. And great. Who are you selling to? And what are you solving for? And well, I'm figuring out whether it works for e-commerce or insurance or healthcare. I'm like, you might be successful, but as a friend, my advice would be to start with the problem and then create a solution rather than creating a solution and figuring out which problem this solution solves. Yeah. And that is
a danger. In our conversations, we call this as SISP, solution in search of a problem. This is how we typically call these things. And this basically boils down to ICP, which is ideal customer profile. Do you have ICP clarity? And if you have that, building solutions, in fact, the solution you can build, you can pivot it if you understand ICP. And those things keep changing. But I'm really glad that, that is something that you touched upon, because that is something we keep reiterating over here. And, the more you know about it, the easier at least the path is for success. Great, Pratik. Thank you. And
second mistake, Aravind, I would underline again, which I did in my process. So this was the biggest mistake. Well, this was the biggest mistake, that I didn't think of customer first. The two other mistakes that I did, which is very apparent to me now. One was I was confused whether I was building a large VC first outcome or I was building a business, like tinkerer business. Hand on my heart, I was a tinkerer. I just wanted to build cool products, and those cool products should make me money. But I was also inspired by what Sachin Bansal and Kunal Bal were doing, and that is like I was then stuck on both sides. That I was thinking of building a very large company, talking to VCs, spending time with VCs, and no one was saying no to me, and like I was moving in the wrong direction. Neither I was building for myself. Well, the 100 of us use it, and it builds a good business. I was stuck in between. That was a mistake. That we should know what we are looking for, what we really want to do, and not what the world wants us to do. Exactly. And the third mistake I did in that spirit was I had co-founders either because of friendship, that hey, good guy, we want to hang out together, so let's build together, or people I did not work with before. I think both are perhaps not the best answers. The best answer is people who have worked with before, people who have built with before. Then you understand each other better, and it's a very, very long journey, 10, 15, 20-year journey. This perhaps lasts longer than marriages do. So it's important to think of co-founders in the right spirit. So I think looking back, and that's why I said, like, I have very few successes to show for in my 3 years of entrepreneurial journey, but lots of
learnings. That's great. Actually, the two other points are also very key. Thank you for pointing it out. The second thing that Pratik said, which is getting caught in the glamour of building a very large business, because it's in some sense building a small business which does about 10 crore, 20 crore, people look down upon. But trust me, building a 5-10 crore business which you can own is much better than actually working. You can spend 5-7 years building a 20 crore business. You're probably in the top 1% of the country. The problem is we are exaggerated and overinflated these billion-dollar valuations. And we think like we're so not successful if we do nothing short of a billion-dollar success. And coming from someone like Nexus who values that is something that you guys have to take very seriously. It's almost like he's saying, don't take our money. If you can build it individually, it's fine. Because there are certain businesses that do not require funding. They can be bootstrapped and built for a very long time. Like Zerodha is probably the biggest example you can have. It's a billion-dollar, multi-billion-dollar success, and two of the brothers own it. So that's a good point, to be clear about what you're building and how big that can grow. And number three, which even Pratik spoke about, it's a very, very important point, which is co-founders. There is an emotional quotient to it, which is, can you spend 24 hours a day? And then there is a skill quotient to it, which is, does this person's skill complement mine? If I'm going to be the product guy, is this guy going to be the GTM guy? Or if I'm the design guy, is he going to be the marketer? And you need to have complementary skills with lesser ego and more appreciation for each other to make a successful partnership. And it just can't simply be, he was my best friend, so I chose him. That solves half of the problem, but the rest is also very important. Okay, moving on. I think that was great. Thank you for your entrepreneurial stint. One thing before I want to finish that and move to Nexus and the rest of the things is that I believe you're a very unique investor simply because you've been an entrepreneur, and I'm very sure you have something called founder empathy. Because since you've gone through the hard work, the dirty work, you understand when a founder comes to you for funding or raise or advice for that matter, there's a sense of founder empathy that you have because you've been through that journey, which I don't see a lot of VCs have, because they're in a very different ball game, right? And they're talking about billions of dollars, and they have their funds and their LP cycles to manage. So I find sometimes VCs don't have founder empathy. And they probably see it as a good thing because they can see the data as clear as it is. But I believe having good conviction is also about having founder empathy, because early bets are all about founder empathy at the end. About conviction, which only comes if you understand where this founder is coming from, what he's been through. So how much of that empathy has helped you make good decisions as an investor? Because I'm a believer in that. Could you throw some light on it?
Well, very well said, Aravind. And this is not just to say, this is not just to compare with other people. I think one simple rule I have had is that if I've talked to a founder, I send a no message for sure. Like I don't ghost and not reply to the after I've met the founder, I'll send a no message. In fact, so much so that a founder met me once and said, Pratik, you did not reply to me last time. I said, no, it's not possible that I did not reply to you. Like I have a process that my no message will be sent.
Perfect.
And that just comes to the fact that, hey, it's just respectful to just send a message, because, and even if I'm wrong, but at least the founder hears one person's perspective, and he can choose to ignore it. Obviously, I can be wrong, and I have been wrong so many times. But the founder can hear one person's perspective and accordingly take the decisions for his business, or at least take the decisions for his fundraising process. That, hey, if one VC is thinking like that, maybe other VCs are also thinking like that. So it's important for him to hear that, and that is one thing I've generally done right, and I think it works for me. And I don't know if it helps me in decision making, but I'll share this one story. I used to reach out to a founder, the second time founder, that hey, I'm hearing your business has made good progress. Would love to chat with you. He said, Pratik, everyone in the country is reaching out to me today because maybe it's public that from the in the VC ecosystem that we are raising and we have a lot of interest. So I don't want to start new conversations. I've almost decided who I want to work with. And my response was, well, uh, uh, I understand, but maybe a conversation would not hurt. And he, his response was very heartwarming. He said, I have said no to everyone, but you, I cannot say no to for a meeting now, because you are the only VC who sent a passy email to me every time I was raising in my last round, in my last company. So because you said no to me every time, we should have a chat. And then we finally chatted, and we liked each other, and we actually closed the deal. Uh,
Wow.
so so it actually,
So it
I
does.
think it works. It helps, and that is, and I would argue all these are parts of long term karma. Like if you are, we see actually the great job where we are actually incentivized to be good citizens of the ecosystem. Uh, we are actually incentivized to be good citizens of the ecosystem, and then the flywheel works. So it actually is a great job.
I got my headline. I'm gonna put this in the thumbnail. Like, we are incentivized to be good citizens. I've never heard someone say it that way, but it makes a lot of sense now. So that's great, Pratik. So let's get into Nexus, and I think that's the benefit for the audience as well, because our audience is predominantly founders, people who are building, people who are wanting to build. Some VCs are also in the dire, some angel investors. Thank you all for company. I think we have a packed house, about 170 today. I think that was the count. So a lot of people interested to meet you.
As you say that, I'm getting more FOMO. So I,
Sure. So, I think you're a partner at Nexus right now. And, some of the companies, just to throw it out there, you've invested now in Zepto, Rapido, Ultrahuman, Bolt, Rocket Lane. You've done previous Zomato was there, you've exited, OLX, Pratilipi, Delivery. These are the companies that we talk about on a regular basis. These are the ones that are there. So it's great that we have someone here who's in the midst of it, understanding. So I think it's going to be very fruitful. We're going to talk about the thesis behind some of these companies, whatever Pratik could share. So firstly, I want you to tell the audience, what does a partner do in Nexus? I think it's very important that entrepreneurs understand the cycle and the hierarchy. What does an analyst do? Where does the partner play a role? What is his day job? Because there's a lot of, let's say, a lot of mist. And people don't know who to reach out first and how do they approach. So first thing, what does a partner do at Nexus? What does Pratik do? There are lots of questions there, and I'll answer all of them. Yeah, one at a time. What does a partner do? We'll start there.
so see that what are the aspects of a VC job? One is sourcing. That the best entrepreneurs should reach out to me, and I should be able to reach out to the best entrepreneurs at the right time. Second is investing. That is taking the decision of investing and deciding that this is the sector I want to invest in, this is the company I want to invest in. Third is closing. That finally, like convincing the founder to take my money over everyone else's. And fourth is then working with the companies on the board, off the board as well, being a thought part of the founder and so on. And fifth is of course exiting, because that's where, that's what finally at the end of the day, my customer is the LP, and that is where the money is made. So these are the aspects. Now layering on top of it, because I need to understand sectors better, deeper. You are engaging with the ecosystem folks, larger companies, corporates, because you want follow-on investors to come in your companies. I'm constantly in touch with the follow-on investors, public market investors to invest in my companies eventually. Because I'm building my pipeline of companies, I'm in touch with the angel investors, earlier stage funds, because I need access to these companies. So all this are really part of the gamut. And so you are engaging with follow-on investors, earlier stage investors, new founders, existing companies. All of this is happening in parallel. And this is true not just for a partner, this is true from the analyst to the partner across the board. I would argue as you grow more senior there's another aspect of raising capital, which is the LP work. So you're engaging with LPs as well. So as you grow more senior, the job with LPs increase, the job with portfolio companies increase. And as you are more junior in the system, you're engaging with newer founders more. And then there's gradation here. There's no black and white that, hey, Once you are a partner, you do this. Once you are an associate, you do this. There's a gradation here, and everyone is involved in all the aspects. So for me, I would argue maybe 40% of my time goes on portfolio companies. 40% of my time goes with new companies, and everything else is the rest, 20 to 40% of the time. And my job is very exciting for me because I actually get energy out of it. Like I genuinely like meeting people. I don't get tired of meeting people at all. And I genuinely get excited about learning about new opportunities, learning about new models. So it is not tiring for me at all, but it is time consuming in the sense that I'm working. It's not like 9 to 5 job type that way. You are involved for 13, 14 hours a day, 6 to 7 days a week. It is exciting, and it is not like hard work in this just for the sake of doing hard work. It is exciting because you are constantly in touch with people who are putting their hearts and souls out there and then explaining you everything that they have unearthed over the past few months. So it is an exciting job, and it is a time-taking job, uh, and that is and all of this is involved, so it is exciting that way. So that was one. Now the other hidden question you had was how should entrepreneurs reach out to funds? So as you can understand, in any corporate sales, reaching to the right stakeholder is important. And of course, trying to reach the highest right stakeholder is the best. But so if you know, and we all write a lot, we all talk a lot. So you have some idea of how each of us thinks. And because of that, you know that in this firm, this guy is the right guy for me. And you reach out to him directly. As you can understand, we all have a lot of top of the funnel. So difficult for everyone to be looking at all the verticals, and difficult for us to be responding to everything as well. So best to reach out via referrals. Associates actually do a better job at this because they have slightly more time to look through more things, and they are actually great partners for founders because they can actually sell their story well internally as well, and they can help the founders tell the story better as well. So a lot of founders tell me, hey, no point talking to associate. I think that is completely wrong. Those guys have never done corporate sales who say we should not talk to associates. In corporate sale, you just don't go to the CEO directly and say, hey, this is my pitch. You actually make sure that every stakeholder is well entrenched into making you successful, and then you sell. So that process also is right. So basically, go via trusted entry point, whether it's an associate, whether it's a partner directly, whether it's a portfolio company of the fund, whether it is an angel, whether it's a friend of the firm. Like, best to go via a referral, or cold also works. But then give a very solid pitch of, like, a cold message of, hey, this is what I'm high level operating in this, let's talk, is perhaps not right. It has to be much more detailed, much more convincing, and then it lands right. So all these paths work. You have to pick what path works for you. But do not say no to an associate. Do not say try to go via referral, and make it as comprehensive as possible is my humble advice.
Got it. I think the takeaway for founders here is referrals work, getting introduced. And also, when you're talking about referrals, whoever is referring you, you need to impress them first also. It's not just you reach out and be like, hey, can you connect me to your VC? No, they're not going to do it that way, and that's going to spam them a lot. You first have to finish. If you're going to reach out an associate, impress him. And he needs to be excited to tell you that story. Hey, this founder, you have to talk to him, Pratik. He's too good. I met him in this party, like whatever that is. So I think referrals work as long as you impress everyone in that channel, similar to how a cold mail works. But I think that was a good explanation. The other thing that I want, Pratik, that I think a lot of the entrepreneurs would also expect and want to learn from is, when they get your time, or when they get any VC time, what should be in a pitch deck? Like, whether it's early stage or Series A. I'm sure there's quite a bit of difference between that, but if you could tell, Because there's a lot of myth against that. Should we give the numbers real? Should be the projections real? Or should I pitch the larger vision? What do you expect in a very good deck that you would say, so that people can get it from you directly?
So, first of all, we are only talking about Seed and Series A companies. And in Seed and Series A companies, projections really don't matter as much, because this is really garbage in, garbage out, really, right? Projections can be anything. Because a lot of things will be figured out over time. That's the reality. Now, in that spirit, I think the framework founders should have is like, just be in our shoes. What are the questions people are asking? So, and maybe we can do the sample exercise with one of the founders here. What are the questions people typically ask? Is the market large? Now, if you are defining the market for the first time, then you need to answer that. But if you are operating in a established large category, then you know that you don't really need to answer that. And once you have proven that the market is large in your mind, then the second question is my approach differentiated? So are other people doing the same things? Are we better than them? What have other people done? Why have other people not done it? Then third is economics. Would economics work in the long run? What would happen in the long run? Like, at what scale does it become a large company? And what all parameters will be there? What all metrics will be there when that is a large company? Fourth is around how much money will it take and what is the path to build that company. And then a lot of it is about whether VC has a thesis or not. That is external, but that is an external problem. Like, these are the points in your head. Now, for everyone, the answer is different. For some of you who's, say, building a quick com fashion company, there, a lot of VCs have invested in a lot of companies in quick com fashion. So you would argue, well, market size is broadly established. So you don't need to spend a lot of time on market size. But the question you are really looking to answer in your email is, what do you know, or what do you believe in that the 4 other players that all of us have met does not believe in? And then it is okay. Then the email lands. But if you send an email saying, I'm building quick com fashion, it's a very large market, it is an incomplete email. You know that, because you know that is not the answer the investor was looking for. Investor was looking for, hey, I understand, but please tell me how you're thinking about it uniquely. But for some categories, say for fabless semiconductors, or something like, or a lot of space tech ideas that are out there. There, the question is not about, hey, what are how are you different? The question is, hey, I'm the best guy to build this, and this is a very large market, and this is how a large company will be built. So different ideas have different questions that that the other guy is asking. Just important to focus on that question, and then everything lands. And happy to do this exercise. I wish I was there in person, and much easier to do this in person, but happy to do this exercise with any one or two of you in this room, and I know it will be landing right for everyone there.
Yeah, I mean, that was one of the things I wanted to do. Like, quickly, if someone could pitch, I thought that would be a great opportunity, and you could just correct it or see what landed well. It would have been very effective. Yeah, I'm okay. We could do some right now, maybe, if someone's interested. I'll probably take 2 just in the lack of time.
I already pitched him on LinkedIn. He has seen my message.
Then you don't get to pitch today. Yeah, why not? Just a minute. Yeah, that's great. I think, as someone setting up, if you really look at what Pratik said, he only told 5 points. And when we see decks and we see pitches and things like that at 7 to 10, 12 pages, you don't really need to do that. It's only 5 or 6 points, and that kind of clarity really helps big time. Especially if you think you're already in a large market, you don't need to spend so much telling the data. The VC knows about the market. If you're in silver jewelry today, Everyone knows it's a 25,000 crore market growing at 25%. You don't need to tell him the nitty-gritties. He's sitting on that every day, which means what is the core problem and what is the main thing that you know he's going to ask about you? That's something that you need to really answer. Can you give it to him? Then you could go for it because you already pitched, you said. Yes, go ahead. Just tell your name and then go ahead.
Hi, my name is Raghav.
Yes.
I'm the founder and CEO of Freeplay.
Yeah.
So we are building a sports tech company. So what we want to do is we want to enable a tech inside every single court that is available right now. We want to revolutionize how people approach sports and how they play and how they interact with each other. Just not, it's a dumb court today where they go play and it's not so interactive. We want to change that approach by bringing in video recording. We want to do live analytics, and we want to change the way how they interact in sports and how they play it. So not only giving video recordings, we also want them to have analytics. So the model that we are building is they come into the court, they record the video, they get highlights of their game, they can be the hero of their game, they can share it on social media, and not only that, they can get the analytics of how they play the game, be it ball tracking, shot analysis. And the model that we're seeing is that people are going to get more and more towards how they want to see themselves, how much calories they've burned, how much they've improved in their game. And the market right now in India is about 430 crores with just sports analytics and not sports engagement per se. And the market is growing at 18% every year, and it's expected to reach 600 crores in the next 5 years. And we want to be there where we are engaging every single customer and not just the pros and semi-pros.
A lot of sense, and thank you for sharing that so succinctly. Hardware will be yours or the courts?
Yes, so we are investing on the cameras, which will be invested and installed in these courts. And we also have an edge device where we also want to build models which can be hosted in these edge devices, where the processing can happen in the edge devices itself, where we can give live analytics. Right now, it's happening in the cloud where we are building the product. And down the line, we want to distribute it to edge devices where it can be pretty much live.
Makes sense. And you will get money from the customers. So it's B2B2C, where you're acquiring customers via the quote, but really customer pays you directly.
Correct. We want to make it a B2B2C where we also have something that's given to the partners or the venue partners. And also we'll be getting this from the customers wherein they get video recordings, they get analytics and all the other features that comes along.
Perfect. So see, in your story, customer value prop is so obviously awesome that we don't even need to discuss this. Like every game I play, I want something like this. And would people pay? And of course, when we talk in detail, we'll talk about whether you expect me to pay 50 rupees or 20 rupees or 100 rupees. But whatever it is, that it will define the market price, market size. But it's all there. And customer value prop is very well plotted. We don't need to talk about it. I think one thing, when you talk about market size is 430 crores, 600 crores, although it's a lot of money, and I'm not saying that it is. I'm not saying that it is not worthwhile doing. But you need to know that VCs, most large VCs, think of this as a small market size, and that is one challenge in this category. So, by the way, one thing you all should know about VC math is a fund like Nexus, which is a $700 million fund. We, from our good companies, want $250 million, $300 million out. If I want $200 million, $250 million out from your company, then I need, and maybe I own 20-25% of the company, not more than that, obviously. So I need you to be $1 billion, $1.5 billion company. Now, if you are saying that your market size is 500 crores, 600 crores, it is not a $1.5 billion outcome. And you said it right then, that it is not just about analytics, it is engagement. And maybe there the market size is much larger. Maybe it is about fan engagement. Their market size becomes larger. And other categories might emerge from there. But you need to articulate that upfront. Because in your articulation, the market size question, which was anyways embedded in my mind, just got amplified. That I don't even need to think about it. So market size question needs to be answered in your case specifically, because 450 crores, 600 crores is a small number from a large VC perspective. That does not mean that a smaller fund would not give a couple of $1 million, $3 million, and then it will land right and it will go public at $1 billion valuation, and everyone makes money. You make money, the fund makes money. It's a great company. But if you are pitching to a $500 million plus VC, then this is an important question that you need to answer. It's okay to not pitch to large VCs and say, I don't want your money. But if you are pitching, then good to answer that. So that's first. The second thing that we are thinking of in your pitch is GTM, because in general, small businesses get acquired, like if your customers are small businesses, neither consumers like you and me, nor large enterprises, then acquiring them always has been challenging because the CAC to LTV does not land as obviously. Now, in your case, I can imagine that CAC to LTV will land right, but the speed of growth does not land as obviously, because you need to acquire, like when you do the math for reaching, say, 500 crore revenue, number of quotes you need to acquire. Each quote requires some time to convince, some time to start, some time to put the cameras at the right place, manage the cameras, etc., etc. Like some deeper GTM thinking is required in the pitch. Now, I did not talk about numbers. Maybe you have 1 quote, 5 quotes, 7 quotes. Today, I'm not really as fussed about it today. So I didn't ask you your revenue numbers yet. But the 2 questions that are more important for me in your email, one is market size, that how you're thinking about it differently. And second is sharper GTM thinking on how you think you could crack it well. These 2 things are more important. Everything else is more solvable and more easy to evolve. But these 2 things are more difficult to answer.
Understood. Thank you so much for your valuable input. Another quick question. So you were saying that valuing or the addressable market that I quoted somewhere around 400 to 600 for a big VC sounds like a small number. Do you think we need to talk about the global market and the global total addressable market that we are actually targeting, and not just the Indian market? Because right now we're building in India for sure, but imagine is the word that we can use to say that we're going to go global, and this is the market size that we are addressing. Should that be the word that we take it in a pitch? Would that make sense?
Yeah, so candidly, Raghav, although that theoretically solves the problem, but if you are truly building a global company, then best to start from global markets only, or maybe have 1 or 2 customers here just to test the product, and then quickly go to the global market and not talk about India at all. And then I'm saying, hey, it's a good team who is thinking about this product, right? And then they'll sell to US, and then sell in US or Europe or whatever it is. And then in your pitch, you'll only talk about competitors in US and Europe because that is the base case. If India market is not like India, I know there's no answer, and so you might win and it's all great. So I'm not talking about, hey, who are you replacing and so on. But in global markets, there will be people building on these lines. And are you replacing them? Are you adding to them? Like, what is the construct right now? Important to then explain that upfront. And it's a very different pitch if you are saying I'm a US first company versus I'm an India company. And both answers are right,
yes,
but important to just be focused and then answering back.
Yeah.
Thank you so much.
I think that was very it's a good analysis. Thank you, Pratik. 2 things that we wanted to say that is, like, I had another conversation with Lightspeed, and very similar to what Pratik said. They basically said, Aravind, after an exit, we expect at least 100 million from our equity to be given to Lightspeed. That's the kind of size that they're expecting. So imagine the kind of success that company has. It has to be worth like $2 billion for them to get at least 100 million for their 10 to 20% after dilution, right? So that's the kind of expectations, because this game is very large. So you'll have to be very clear about which kind of VCs you can approach. That's one. And second, very similarly, telling about a global market is a great story. But the thing is, it's not just about telling about that I'm in a global market. Your GTM changes, your competition changes, your entire team size changes. So you simply say, hey, you know what? India's a testing ground because I'm here, but I'm only going to be talking about the US market or the European market. And that has to reflect in your marketing and your team building and how do you scale. It's not simply just to escape the market opportunity. You simply say, I'm in a global market. Yeah. So that's what even Pratik is trying to tell, because the entire pitch fundamentally changes totally different. So I think this is a great example, guys. Totally worth thing. We'll have one more,
Thank
and
you.
then we'll.
I have a question.
You can ask questions. That's but we'll have one more pitch. The lady. I think we'll give it to a man and a girl. It's better. Right there, ma'am. So that we have equal participation, guys. Sorry, just for lack of time. But
Thank you. Good morning. Rajni and I'm Rani Muralidharan. We represent Independent Connections Private Limited. Independent is independent pen. Pen is woman in Tamil. And this company helps women on career break get back to work. We just simply do that. While,
frozen.
in fact, that is my question also in Slido, is why is not this considered as a priority investment? Because the market size very conservatively is around 7 million, where I think it's 70 million rather, women who are waiting to get back to work. The size could be somewhere around 1,000 to 2,000 crores if you look at the numbers. And there is need. If you want to increase your GDP, just simply get these women back who want to come back, right? So this is what we do. So we train the women. We are AI enabling the process and getting the women ready to get back to work. It could be 2 years, 5 years, 10 years, depending on the number of years of gap. And it could be, they may say, I was doing this, now I want to do this. So we also help them change the trajectory of their career. And we start with consulting with them, and then we end with placing them somewhere and being connected with them for the next 3 to 6 months so that there is no dropout. So the whole journey is handled by us. So we are a marketplace. On one side, it's the women who want to get back to work. On the other side, it's the companies who will absorb them. So this is the company that we run. And yes, we are always in this question of whether I should be bootstrapped or whether I should get invested. But this is what we do. So I would like to hear from Pratik about what he thinks about this business and how we should invest and how we should look at it. Thank you.
So, Rajni, I think the problem statement is very, very real. And I have actually been talking about this problem since a long time. It's a very large market. In fact, we invested in Runner long back. And with Runner team also, we had this discussion. And then when we invested in White Hat, I was so proud of White Hat supply, because I said so many women are getting a great job to teach kids, and it landslide. And I was so disappointed in myself that I could not see the beauty in Misho, because Misho did this job right. So you are tackling the problem from a different side. But like, if I see who all in the startup ecosystem have solved the problem in a different way, I think Misho has actually solved this problem in a very good way. That they created new supply of jobs for this user base, and it landed right. So I 100% agree that the problem statement is very, very large, and very large impact will get created. Now, first of all, generally we should chat. Like, it's a good problem to solve and no market size issues there, so we should definitely chat. However, I think the way you articulated your business, you said it is a marketplace, but reality is you had lesser marketplace type elements. What you are really doing is you are acquiring supply of women, training them, and getting them placed. This is more like a university and less like a marketplace. This is what universities do or coaching institutes do. You acquire candidates, smart candidates, take money from them or take money from them later, train them, make them capable, give them a certificate, create a brand, and get high quality people to get placed in good companies. Those good companies like you enough in future as well that they continue to hire from you because they know that your supply is high quality, and then the flywheel works. So this is really closer to a university than a pure play marketplace. And that is why perhaps you can choose to say, I don't need to raise capital for this, because you are acquiring, like, you are broadly unit economics profitable. You don't really need to like burn money to grow. You are building a like real cash flow profitable business almost from day one. You can raise capital, and like if you have thoughts around why you want to raise and how this can become a like non-linear growth company, we should definitely chat. But in the base case, the way you articulated it, you perhaps don't need to raise capital. Uh, but uh, but your thoughts are very right. It's a very large problem, and whoever solves the women unemployment problem in India, uh, it's a it's a large company to be created. I have bias against one-time revenue companies, so I would prefer to think of this in a more how can we have higher engagement from the user and higher LTV. I have bias against placement first companies because very difficult to scale placements. Um, it's because at the end of the day, the scale works against you there. You can place 1,000 people, but can you place 100,000 people? Perhaps no. So yeah, I think these are the questions which we should chat over time. But broadly, market size is great, and these are the questions one needs to answer.
So, my question to you would be, how should I position myself to scale? I understand that scaling is important, but taking responsibility for placement can make me not grow. So, because placement is not always dependent on me, what I can do well is get them ready and be ready to go face the market like any other somebody who's trying to get employed. So how do I position myself, because the addressable market is so huge that I cannot restrict myself to just being this, right? So the other thing that we are also thinking about, should I add ed tech to my offering where I become a platform that helps these women get trained, get upskilled, and be ready for the market. So sometimes the upskilling requirement is unique for these women because it cannot be just a course from a Coursera or Udemy, because the gap is a little different,
Sure.
right? So can you suggest how we can scale this up?
Yeah. So by the way, Rani, your question is I cannot have an answer to this question. Like if I had the answer to this question, then I would be building this company. Like this is the real
Yeah.
this is the real answer to this question. It is. I'm sorry. If someone had answered this question, it is just, and that is why your ingenuity needs to come in here. Yeah, you have to think outside the box. There's no.
If you actually crack it, you will get funding from Nexus. I think that's the thing, Pratik. If you crack it, Pratik will fund you. That's for sure.
Like I've spent so much time on this industry. I've talked to so many founders. None of us have been able to figure out an answer. So that's why I'm not even. Earlier, I used to propose, hey, let's meet up and let's brainstorm together. Let's see something and come out. I know I'll not be able to come out with an answer because I've done this exercise 15 times now, and I have not been able to come out. You will of course be able to, but I have not been able to come up with anything that is worth it.
Great, thank you. I think just in the interest of time, we have to end the session. But I want to ask two questions, and then we'll be done, and we'll have a larger session another time, Pratik. But I think thank you so much for doing this. I think a lot of you benefited from what a VC is expecting. See, for him it was market size. For ma'am, it was storytelling. And both it's an art and science to actually pitch to a VC very well. But the last thoughts I want is that I wanted to do a rapid fire. We can't do it here, so we'll do that later. But one thing that I wanted to ask is that with Zepto, with Rapido, Delivery, and all these companies, you've invested in quite a bit of money in them, and a lot of them are doing well. I was able to meet Delivery's founder, and he's a great guy. And what is the one founder common DNA that you see in all these companies that makes it? Because we believe at the end of the day, even whether it's Series A or not, it's about the founder. Can they pull this off from here to the next level? So what is that common DNA that you see across all your investments that says this is why this is working across the other investments that didn't? Is there something like that, or am I just thinking of it?
Yeah, no. So see, success, of course, a lot of things have to go right for the company to be successful. So I cannot say that this is one reason a company got successful. However, I think I'll say two things on what has been very important. One is uh, knowing something and believing in something that no one else does. In all these companies, it was very critical. If you think about it, Rapido was a very, very, like, the founder just should not have, could have chosen to not persevere, and could have chosen to say, well, yeah, Ola and Uber have won it. Uh, but he believed that market size will expand once he expands the supply and demand with a lower price product. And that is why he won. Crazy story on why he was successful. Zepto, again, grocery company, does not make sense to start another grocery company when everyone else was failing. But Zepto believed that with 10-minute delivery, they will be able to start a new category and they'll be able to change customer behavior. I think it or delivery in those days, like smart guys from like consulting and IAMs, like why are they starting a courier company? But they believed that market size, that the market of e-commerce is about to expand in India and this will be created. Like all these guys believed in something that the world did not believe in. And they stuck their guns to it for a long, long time. Most of us will run away in tough times. They did not.
Yes.
And most of them, so most of us don't have any conviction in life. They had. But even for us who do have conviction, we, at least I know personally, I have ran away from it a lot of times. But these guys just continue to do it. And these two things were perhaps the most important things for them.
Great. I think this is like the best example you can get, because it's basically saying stay alive and stay at it. That's about it. And believing something has to do a lot with conviction. See, Rapido is probably the greatest disruptor for Uber. You know, in a duopoly market, someone comes with a bike and challenges it. And in fact, you know, I know there was a lot of problems with the legality of it. You know, India doing bike taxi. But I don't know if many of you guys know, Uber, when it started in the US, also had all the legal problems. You know, they had a whole taxi union that did not allow them to function. If you see this movie called Super Pumped, I think it's a series, it was there, you'll exactly know what went through. So you got to be a challenger brand and disrupt and believe in something with data and conviction to actually make it. And I think that's some of the common DNAs that these big companies have. I think with that, I would want to end the session. There was a lot more, but we will do it in detail. Some of the questions that you guys have, I think you put it on Slido. I'm going to send it to you, Pratik. And, you know, it will be really great if you can answer them. And we are going to send them across to people who've asked them. Thank you all so much for the session. Thank you, Pratik. We will catch up soon in Chennai. You're promising me that.
My sincere apologies again, but this was really unavoidable. Looking back, I don't think it was. I was safe, I was comfortable, but the reality is it was such a bad place to be in that no food, no toilet, like you don't know how long you'll be there. And we were like, "Acha, 3 din lagega." Like, it's just crazy. So it was super, super scary. And I didn't know what I could have done differently in this situation. So sincerely apologies, but
No worries at all. I think probably, you know, now the idea is you will invest in an airline, I guess.
Warren Buffett says never to invest in an airline. So
Great. Thank you. Thank you all. Thank you for the session. And kudos, Pratik. Thank you. Thank you. Take care.